This is a download from BFM 89.9, the business station.
Good morning, George. Hillary Clinton, who is going to be the first woman and nominee, presidential nominee for the United States, that's now official. But she actually trails Donald Trump in the polls, 45% to Trump's 48%. What do you think of this gap, which is quite big by U.S. standards, and whose presidency will be better for markets in the U.S.?
Good morning, Julian. Well, going away from the pure politics of the situation, from a market point of view, Trump will definitely be better. He will do better at cutting through the strangling regulation that we're facing from a fundamental and economic basis, and that will be better for business. He will be better at negotiating, which he has proven in the past. Also, in dealing with people such as Putin. Putin met with Obama, looked at him straight in the eye, and was able to understand how to handle Obama. Trump does not have that, so he will be much better at negotiating from a position of strength. And in fact, if you take a look at some of his past, here in New York City, there was a Central Park ice skating rink. The project was languishing. It was well over budget. It was taking much longer. He brought it back below budget. He brought it in earlier than expected. He has generated thousands of jobs, and that's using the metric that's being used currently for the political propaganda that we're hearing. So from just a pure market point of view, Trump would be better than Hillary.
Some people say that these tactics are quite strong-armed when dealing with the Chinese or the Russians. Do you think there might be some form of global capitulation that would affect U.S. trade and U.S. economy?
I don't expect, Julian, that there will be a true capitulation. I think what will happen is that typically Trump will come from a position of strength. He will present the case, and then ultimately a compromise will be worked between all parties, but it will be done from a position of strength from the U.S. as opposed to a potential or perceived weakness in our positions. I think that ultimately, if you look at the compromises that have occurred in the past, parties on all sides have been satisfied with the ultimate conclusion. I just think that from a business point of view, that our markets will react more favorably to the perception that Trump will be bargaining from a greater position of strength as opposed to what we're seeing now. And I suspect that the compromise that's worked out ultimately will be more in agreement with the rest of the world.
There was at least one other analyst who thought that Donald Trump would raise interest rates, and he was speaking about this from a more positive kind of outlook. And the plan was that to raise interest rates and then do a fourth quantitative easing. Is this kind of theory something you would agree with?
I would agree that Trump would most likely imply or indicate that interest rates would be rising. That strategy has been somewhat positive and successful based on what our Federal Reserve has done in the past. I'm not sure that ultimately it will occur because I think reality will come in, whatever the reality is, in the third and fourth quarter of this year. Right now, it appears that there is a possibility that our interest rates could be increased at least once without jeopardizing the longer-term potential of our market. So I do think that Trump will have a better handle on that and will be able to use that to a greater advantage for our economy from a longer-term perspective. I think getting away from low interest rates and getting back to a more normal interest rate environment is in our best interest. And ultimately, I think the whole world will benefit from that as the world as a whole transitions back to more normal interest rates.
Mm-hmm. The U.S. dollar is also very strong. I think because of the safe haven status. What would happen after November's election? Do you see the U.S. dollar going a different direction?
It could very well. Now, there are two ways of looking at it. One is from a trading point of view. I think that the U.S. dollar becomes much more volatile, regardless of who wins. Forgetting about the politics, just having an election behind us and the certainty of what's happened, the initial reaction, traders will take full advantage of it, and you'll see an awful lot of volatility. But as we get out of the trading phase of the reaction to whatever the elections, whatever happens with the elections. I do suspect that there will be a greater transition of the U.S. dollar relative to the rest. Now, you see right now, we're seeing against the yen. The yen rallied strongly. The Nikkei 225 fell to a 2-week low. Yes, there was a concern of anticipated economic stimulus package not going through. When you look at the U.S., you see a much more certainty of the directionality of what's happening with our interest rates. The timing is not is still in the air, and the Federal Reserve has been quite artistic in using that to the advantage. I suspect that we will see the U.S. dollar begin to develop a more normal base relative to the rest of the U.S. Of the other currencies, and so I suspect that you will not see the U.S. dollar strengthening as much as what has happened over the last 3 months.
Now, the yen has strengthened to 104 against the US dollar. What does this do to Abenomics as a policy, which is a yen weakening kind of policy?
Yes, it is unusual. What I'm noticing is that the BOJ easing this Friday has been undermined by the central bank wanting some idea of the government's fiscal plans, but deciding that it will allow the bank to go ahead and make its decision. And it's going to be very hard for that without knowing what additional supplementary measures are going to be needed. Also, last week there was a very oddly timed release of the interview comments from Kuroda, where he pushed back the expectations of greater monetary policy experimentation. So it's not clear as to what's happening, and I think that is what is affecting the yen and also the Nikkei.
And in the tech sector, we saw that Yahoo sold off its core business to Verizon. Is the situation challenging for Verizon in that they are trying to compete in a space that's occupied by the giants like Facebook and Google?
Yes, Verizon needs Yahoo, at least the ability that Yahoo brings to the table. From an investment point of view, Verizon did back off $1, so now the yield on Verizon, and Verizon has been a utility-type stock, a high-yield-type stock, has now increased to 4.12%. I suspect it's going to go a little bit higher, and I suspect that will create some longer-term investment interest, but only from a yield point of view. From a fundamental point of view, from a business point of view, they really do need Yahoo. Now, Yahoo, with its core business being sold, you're going to see Yahoo was up 44 cents today. You're going to see probably an increase in interest in Alibaba. Alibaba might come knocking, and that would make a lot of sense. So there's going to be activity in both stocks. Right now, Yahoo has more of a look from an acquisition point of view as opposed to Verizon, where I think that once it gets used to the additional capabilities, I do suspect that Verizon becomes much more of a player in that space.
Thanks so much. That was Dorland, Chief Investment Officer with Landor and Fuest Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.